Hi there, and welcome to this video. It's going to be a short one as well. I don't like keeping videos too long. So this video is regarding just my approach into trading. I've been trading since 2008, and the one thing that I came across, and something that I'll discuss in another video, is just the roller coaster ride that you take when learning or wanting to know, how to trade is it's quite a vigorous one, with a lot of ups and downs, and it's not something that you should be doing alone. You need someone to guide you through it, to talk about the kind of things that you go through, because it's really genetic. From one trader to another, you hear the same kind of issues, and that comes out. So with that in mind, I'm just going to give you an idea of what my approach is and why I do what I do. The first thing is, when I started out, I looked at a lot of different strategies, and the thing is, it gets you down when the strategy works a short while and then doesn't, and you kind of get lost in that moment, until I came across a trader that experienced the same things I experienced. And that's when I realized, okay, I need to focus on certain things. I need to change the way I've been doing things. And that's when my trading started to change, and the results that I was getting. So I used to have a lot of indicators on my charts. I no longer do. I trade price action, and only price action. Okay, it's the best way to do it, simply because there's not a lot of indicators. The thing is, the indicators, in a way, is only telling you what the price action is doing. You understand? So why have it? That's my opinion. So I trade price action. The only indicator that I use is a MACD, and that's the sole purpose of determining divergence of price, which we'll talk about at a later stage. But yeah, so that's a little background in terms of why I got to the point of doing trading the way I do. So the first thing that you need to realize is, if you don't have a sentiment, you don't have an idea of what the market is doing and where is it going, you're not going to make the best decision whether to buy or sell within that market. So for me, being a long-term trader, a swing trader, my entries are on 4 hours, but this approach can be used on anything. So if you're trading on the 4 hours, as an entry point, use the weekly and the monthly as your guide to what the direction is, and to get a sentiment of the market, and also to establish support and resistance levels. Okay. If you're trading on your entries are on the hour, which is intraday, you use the daily and the weekly as your time frames to establish trend, sentiment, and support and resistance. Um, then, if you are scalping, your approach, I wouldn't scalp lower than the 15 minutes. If you're scalping, you use the hour and the 4 hour. Okay, so that makes sense out. And now I'll just go through with you just the way we do it. So I learned from a trader that was telling his story to me, or I was listening to, that he does something that he refers to as the top-down analysis. So working from the biggest time frame that you're using down to the smallest, which is your entry. And again, I swing trade, so I'm using the month, the week, and the 4 hour. So the first thing is looking at the euro dollar, and I just want to take this away. We have, that's what we have. Okay, so from the offset, we get a large segment of what the price has done. It's down, it's up, it's down, kind of consolidated there. Bullish, bearish, bullish. Okay, so I wanna own it in a bit. Just want to increase the size of the chart, and I just want to look at the very last movement within the movement. So I would then consider that. So the first thing that we need to do is establish what the trend is. Okay, and for me the trend is bullish. The reason why I say that is because from the low the price made here, okay, and I'm using when I analyze the markets, I don't consider what is happening or the wicks. That's basically for me just market movers moving the market in a direction, and it's not really a real movement of demand and supply. Okay, so I use that as my low. I notice that the price then moved higher and then retraced, making another low. And if you go further, the price then bullish now in its second pullback or second retracement. Okay, I would expect that the price could come down till about there, but we're gonna get more evidence to support that. Okay, also I see that excuse me, that the price has made a new high. Okay, the previous high was that's the lowest high. Okay, the most recent high was that one. Okay, the price broke that very convincingly, and significantly that is now a new high. And then also with the retracement, that's our second high that the price has made. So we see two higher highs and two higher lows as well. So that's enough to establish a trend for me. If I have two of the one and one of the other, that's kind of good enough. But two each, even though the lower the higher low here, the higher low here has not been established yet because we're still waiting for the price to bounce off a support level and go higher. I'm considering that will happen here. Again, today is the 2nd of February, if I didn't say that already. So you can definitely look at this chart later on and see where we are. This is a live chart. So I don't have an idea of what the market's going to do until it does it. Okay, which is what you really want when you're looking at the results of people that you get advice from. You want them to show you, not in hindsight, or not foregoing. The next thing that we're going to do after we determine the establishment of the trend is to set our support and resistance levels. Okay, and the way I do that is to look. We're always looking left to see what's happening. This is where we are. We need to look left to see what's happening on the side when it comes to support and resistance. So the first thing I notice is our support and resistance levels must be obviously above the price will be our resistance, below the price will be support. So if I set support and resistance levels above the price where we currently are, I would consider that level is there. And why I say that is I'm looking for the price to close at the level and on a candlestick, and to open at the same level on the very following candlestick. So in terms of this candle here, you can see here's a bullish candle closed, and the bearish candle closed at that level, and the bullish candle opened at it and closed over there. So the best thing would be that point where the one candle closes and the one opens is not more than 1 pip in difference. Okay, so what I'm going to do is I'm going to check out what this is. So here you can see the close for this candle is 2193, 1.2193, and the open of this candle is 21, sorry, the open 2192. Okay, now 23 and 2, sorry, 2192. So 2192 and 2193 is 1 pip in difference. So that's all I want. So that would be a good level of resistance for me. Okay, I then decide on my support level. Now I wanna just remove this here because I already see that that's the level that I want, because again we have a point where the one candle closes and the next one opens on the same level. Can you see that there? Okay, and this levels here, this one closes at 1935, 1.1935. This one opens at 1936, okay, which is 1 pip. 1935, 1936. You just see 1935. Yeah, okay, so that's good enough, and that's when I place my support level. So now remember what I told you in terms of where I expect this price to go. I'm expecting it to go, I said somewhere there, okay, and that's because I saw that that level is a level that it could possibly go to. Okay, so again creating that whole support and resistance in terms of the price. So following to that, we then move down to the week, and the week, what we want to do on the week is determine how strong those levels of support and resistance is. Okay, now already the resistance, also if that levels is on another two candles that open and closes roughly in the same area as that resistance, that's a good level. Okay, so we want to go back, and again we want to look left, and we see, and I see there immediately, I see there's a good position there, even though that this one, that candle and that candle is not opening and closing on the same level, they're on the same price level. You can see what I'm talking about in terms of what the price does around that level. Okay, so we're not specifically looking at what the wicks does, but we want to see the support for that level in terms of opening and closing on that level of two candles. Okay, so I just want to move further back. Okay, so the support level is very strong. There is something, but again it's too far away in terms of opening and closing on the same level. Okay, so now it's really going far back. There we go. I would consider that. See that pull there. This is back in 2006, but it's still a support and resistance level. Okay. Sometimes you find it much closer, but this does help to create your idea of what the market's going to do. Okay. As you can see here as well on the week, we have the same support and resistance, the same change in terms of higher highs and higher lows that the market has made. So in terms of this trade, and this is my approach, is you would then wait for the 4-hour. Okay, and remember this candle here is January. Okay, so the price was there, the price is moving down, so I would then consider a sell into that position. Okay, even though the trend is bullish, the market is retracing at the moment. So if I'm confident enough that I can trade the retracement, I will, but I will wait for the market to return to the upside, and for the 4-hour then to take position, to trade it up. Okay, so you can see here currently the 4-hour is having that retracement from that position there, from this position here. Just close it so you can see a bit better. See from that position there, it's retracing. Okay. So let's just go back. Okay, so the other thing is now that I know the position of the market, what the market is doing and where it wants to go, what is next? What do I do next? Do I just take a trade anytime? No, we wait. We wait for the market to tell us when it's a good time to then trade off those levels. Okay, so a good position would then be, in terms of taking a buy, would be when the market gets to that point, once the market moves down there. Okay, but then also, before I take the trade, I want to see the market moving in the direction of my sentiment. In this case, the bullish, and I want to see the market retrace. Okay, and this is the entry approach. The entry approach, in my approach to enter the market, I use Fibonacci. So when the market then goes into the direction, I would then insert a Fibonacci retracement tool, and then see that the market retraces at least to 50% of that move. Okay. I'm going to show you just how to use that, but I'll make another video with regards to my entry alone. But I'll just show you, just to give you an example, if I decided to trade in the direction of the support level, what I would have done is see that the market's pulling back, okay, and then take a trade on the pullback once it hits the 50% level, and take it down. Okay. There is another tool that I use, another indicator that I add to that, just one more, and just add it quick, which is the MACD. Okay. And the MACD just gives me a sense where we are really. So the movement here would be from my high to my low. If you guys know fiber work, pulling back, that's the entry. Let me just make that bigger. Pull back to the 50% level is at that level. My stop loss will be around that level. Okay, as previous high, which is about 38 pips, adding whatever the difference is on the spread. In this case it's about 3, so makes it 40, and we would have hit at least 1-to-1 already, okay, with some more movement in place. So I hope that helps a bit. I don't want to make this video long, but what I'll do is I'll do an analysis on one of the few analysis on some of the other currencies, and you can definitely look. Thanks for watching.